Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Global Market Analyst here at Markets.com. Look, this is a quick video preview for the webinar, which is going to happen in a few seconds, so do not tune out. Look, we're going to talk markets where we have the US CPIs coming up today, so hey, something to look into. So yeah, hopefully you'll enjoy the session. Do not forget to ask questions during the live session or maybe during the recorded session as well. And yeah, we can go from there. So ladies and gentlemen, I'll see you in a bit. All right, okay. Hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Global Market Analyst here at Markets.com. So, ladies and gentlemen, it is midweek. Let me just correct my camera here a little bit to the upside. There we go. Look, it's the middle of the week, and we do have some data coming out. So we had quite an interesting week so far. I think that yes, we in the beginning of this week, if you watched my session, I was talking about the tariffs that got imposed again. So we have from Monday we have like a 25% tariffs. The U.S. imposed 25% tariffs on steel and aluminum. Okay. I mean, this is something not new already, so I think that we're going to be getting more and more of that. So I think that everybody should brace themselves, and it seems like that the market doesn't really give a damn too much. But anyway, I'll look into all that before we jump into the charts. Let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. Look, I will give you a few seconds to read the rest. I'm not going to disappear anywhere. Just going to finish off a few things here and there. As always, my good morning in the chat room. Good morning, everyone. So yes, feel free to ask questions. Feel free to communicate, because I do welcome that, and I think that that's actually creating much better a much better atmosphere. So let's put it this way. So yeah, ladies and gentlemen, also just before we jump into the charts, a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist you. So yes, if you don't have any questions, but most likely reach out to our customer support, because again, I wouldn't be able to answer all the questions. Some market-related questions, yes. Something related to specific technical things, then probably not the best person for that. So anyway, let's see what's happening right now in general. Japan, we are seeing a little bit of a rebound here from that 200-day EMA, from this little short-term upside line, which is taken from the low the 27th of September. So basically nothing new. If you watched my webinar, on Monday, so basically I kind of I'm sticking to the same game plan. So I'm not really, creating something new here. Is the same analysis, because while we remain above this upside line, yes, I'm not really getting comfortable with the downside. As long as we remain below this hurdle, this barrier, this 40,300 zone, I'm not getting comfortable with the upside. So basically I'm in limbo. I'm stuck here, and to be honest, what can I say? It's a little bit of a waiting period right now. Look, unless you're maybe like a range trader or something. I mean, okay, this is not a very clear range. It's more, still it has a tilt. It's more of an ascending triangle pattern. If we're talking about ascending triangle patterns, then such patterns tend to break to the upside. However, a confirmation clearance here through this 40,300 zone ish again is needed, because as I said before, it's never the exact level. It's more of an area around that level. So if we can get a nice clearance of that one, this could increase the chances for a possible move higher. However, as we know, I mean, we still need to keep an eye on the market and what's happening there. But again, at this point, we're stuck and it could be something interesting later on. So hey, let's keep an eye on that one. Australia 200. Or should I say ASX 200. So again, similar story, the same analysis is valid. I mean, we are not really getting anywhere yet, because again, okay, let's say after finding good support near this 8,000 kind of 370 zone, we rebounded and we're pushing higher. Somebody might say, hey, we're creating these, like higher lows here. Yes, true, but are we going to go for a higher high? Well, look, for me, either way, if we clear, let's say if we clear this little hurdle right there, that's fine. Okay, but it's just a little step towards some higher levels, because for me the priority is still this one, the current all-time high near the which was hit here at the end of January. So if we can clear that 8,574 territory, great. I am looking at some higher levels. Simple as that. China 50 index. So there we go. And hey, Jindao, hey, I can see you there in the chat room. Thank you very much for tuning in. I really appreciate that. Thank you very much. Yes, look, what I'm looking at right now, here on China 50 index. So I talked about this before, and we are currently, from the technical perspective, we're currently stuck in a range. In terms of economic calendar, by the way, for today, anything exciting? There we go. We had some stuff here. Oh, it didn't come out. No, interesting. Okay. Well, leave it for there. Maybe this data will come out later. But for now, like, I mean, today's probably going to be a little bit on the quiet side. The first half of the maybe even the European session will be on the quiet side until we hit the CPIs, which I'll get to in a bit. But for now, coming back to China 50, look, we're seeing some positivity, and I said to you last time, I do not kind of underestimate this index and the Chinese market. I think that there could be some nice opportunities here, and especially given the fact that we're hearing that some big investors, some big US investors are kind of betting hard on China. That's kind of that's just giving that extra buzz, extra boost to the whole kind of outlook for some Chinese stocks and overall the stock market. So look, we have, I think, if I'm not mistaken, David Tepper, one of the big sharks in the world of investment in the US. He came out, he started like actively buying everything China related. I mean, look, one person coming out buying, that's fine, but he came out publicly, so we don't know if somebody else is like maybe doing this quietly. So look, for now, I will say it this way: be careful. Do not underestimate, like I said, the Chinese market, despite all the sanctions and tariffs and okay, maybe not sanctions, but tariffs and stuff like that from the US. I think that it can be resolved, and I think that basically the new leadership wants just to be acknowledged and stuff like that. So you need to show that let's talk, okay, and I think that they will budge eventually. So the agreements will be reached. I think the new leadership just kind of wants a little. The new U.S. leadership wants a little bit of that action, like that that deal making to make a show, that there is something happening. So look, I've made this, I've made that. So okay, if that's the, I think that's the kind of, from my perspective at least, that's what I'm seeing. So long story short, like I said, for me to get bearish on this one, on China 50, I need to see a drop somewhere below this 12,700 and kind of 50, or actually, where's that area here? Yes, 600, something, 12,000 kind of 600 zone. A drop below that, yep, could attract more bears into the game. But then, look, if we do drop below the 200-day EMA, then this is something also to keep in mind. That might present itself with a nice opportunity. Let's jump into the Dow Jones Industrial Average, and everybody is glued to their screens today because we have the CPIs. Look, okay, let's pick up on those. By the way, I did a separate video on the CPIs as well. You can check it out on YouTube on our page. Yeah, I mean, it can. I think you can find some sort of useful thoughts in there as well. Just like an opinion for you to build your own opinion. So as I keep on saying to everybody, do not follow anybody. Just have your own, build your own strategy, build your own ideas in your head. But you know, like you listen to me, you listen to another analyst, you know, you listen to other people as well. But what you try to do all the time is, let's say, just from everything what has been said, you pick out that one sentence, one phrase, which you can add to your own analysis and build your own analysis, and then kind of, you know, make decisions based on that. So make decisions based on what you think is correct. Don't, like I said, don't listen to anybody else, even me. You know, don't listen. I keep on honestly saying this to people. Do not, because again, you know, we all have different opinions, but I look at the markets from one perspective, the other person looks at the markets from another perspective, and that's fine. This is okay. This is called having an opinion. So, you know, it's absolutely okay. Now, coming back to the CPI situation, look. The core CPI is the core inflation rate is the year-on-one is expected to decline a little bit, going from 3.2 plus 3.2 to plus 3.1. So in a way, it's kind of saying that the energy and food prices, which we're excluding here, everything apart from that is showing a little bit of a sign of weakness. Now, but that's in terms of the core. With the headline, we're seeing that, look, oil prices have stabilized recently, and even we saw a bit of a rally in oil prices, and I'll get to oil in a bit as well. But this number here, okay, look, what can I say? For now, I think that if we do come out at 2.9 or even below that, that's fine. The stock market could remain somewhat positive, but again, depending on the number, this is what I'm kind of referring to. So if the number comes out on the slightly, let's say, lower side or slightly on the higher side, I think that still is okay. So if it's slightly on the lower side, then there is an indication that, you know, the Fed will kind of remain, how to say it, with the same policy. You know, they're not going to go for a hike, so they're not going to go for some sort of a, you know, like more tightening or something, because at the moment what we're expecting to see by the end of this year is let me just adjust this very quickly. There we go. We're expecting to see one cut. Okay, that's fine. The market is, like I said, the market is accepting this fact, and I think the market is fine, and that's why the market could still kind of rally. However, if we see a lower number, if we see the inflation coming out at 2.9, okay, the market might say, okay, that's absolutely fine, we're stable, there is stability, so we can stick to what we have right now. So we just basically react to other economic data. For example, the job numbers, you know, for example, the PCE, or, you know, or something else, or like the ISM numbers, manufacturing ISM PMIs. So we can react to that. So also, okay, if we come out a little bit higher than this 2.9, let's say we come out at 3, okay, this is where the market could start worrying a little bit. They would think, okay, look, we're now, you know, pushing further away from the Fed's inflation target of 2%. However, slight inflation is good in a way. It's showing growth. So it's showing like progress, right? So, you know, also kind of okay. But if we start seeing some sort of like bigger deviations, now that's where, like I said, the issue could arise. And especially also looking at, you know, Jerome Powell's testimony yesterday. I mean, he's testimony today. He's holding a testimony today as well. But if you know, from what he said yesterday, it's kind of, you know, that they're not in a rush to lower rates, which is fine. Okay, I mean, I think we got to that point. But the thing is, he's not saying that, you know, we're now considering maybe, you know, abandoning the rate cuts at all. So that would be a little bit of a, you know, a pessimistic approach here where indices could actually, start correcting lower. So at the moment, in a way, everything is kind of supporting the stock market unless we have some sort of a big tariff war, and this, which could affect the kind of the global market. So that's where the issue is. So for me, I think that the political side at this point could be the more important one. But unless, if that more important one, if the data remains like somewhere near forecasts, somewhere near the same levels, but if it starts to deviate a lot, or let's say to the upside or to the downside, now that's where the interesting part could come in. So basically, from long story short, I need some sort of bigger moves on a bigger amplitude on these, on the actual numbers before, let's say, getting, like, let's say, very excited with the data or something like that. I am excited with the data in general, yes, but I need to see some sort of bigger moves here. If it somehow drops much lower, let's say, to the downside, I think that this could still, go higher in a way. But this is another problem. It depends how you look at it, because if the numbers actually do drop a lot to the downside, maybe this could say, hey, the Fed might actually not need to go and cut at all, or something like that. But okay, we'll see. Maybe on the contrary, to create more cheap money in order to print more, and increase lending, and kind of this way increase inflation again. But again, we'll see that there's a lot of ifs in here. So for now, the way the way we could play this one out is, well, to be honest, on the Dow, I would just observe the price action, because for me to get comfortable with some higher levels, I need to see a clearance of the current all-time high, period. If we can get that clearance of the current all-time high, then yes, great, I will go to the upside. The S&P 500, similar story. I need to see a clearance of the current all-time high in order to go higher. NASDAQ, what's happening here? Similar story. Yes, we're grinding slowly to the upside, so there is in a way still a bullish agenda here. We're still seeing a push. We're still seeing a push higher. We still remain above all the EMAs on my daily chart. However, my problem here right now is this, that it seems like this we're still below this downside line. So this little short-term downside line is kind of a bit of a pain in the bottom for me here, and I need to see a clearance of that one at least to get comfortable with some higher levels. But for me to get even more comfortable with the higher levels, I need to see a clearance of the current all-time high, period. So you choose whatever you're comfortable with. The most important, just promise me that you're going to have your stop losses in place, and we'll go from there. If, let's say, this downside line continues to provide resistance here on NASDAQ, well, what can I say? I think that we could start looking at some lower levels. The only thing is that I would prefer actually to wait for a drop below the 50-day EMA here, shown as the green line, but then we have an obstacle of the 100-day EMA, which has been, a good strong area of support. But that's fine. If we do break the 50, the next target could be the 100. But then if we clear the 100, now that's where it could become quite interesting. By the way, in terms of clearing, when I say clearing, I mean if we see the body of the daily candle staying below the 100-day EMA, and this way kind of increases the chances for a move lower, because we might get something like this here, like false breakouts, and yeah, that's no good for the bears. We could just see further declines here. Anyway, jumping into the US dollar index very quickly. Yes, so we're stuck here near this key area of support, near the 107.50 zone. Look, I said it before and I'll say it again, I need a clearance of that one in order to go lower. So keep your eyes on inflation today. If by any chance this comes out on the lower side, maybe we could see this one actually falling off the cliff here. If inflation comes out higher, then maybe we will remain somewhere here, but again, it depends on how much higher. Is it just going to be like 3%? Maybe that's not going to be enough for the for market participants, and still we will see some action to the downside here. So that's why like I said, I'm not rushing into things yet. I never try to predict too much, you know, but if I am trading, then I wait for the data to come out, see the market reaction, and then do something about it. Because again, I don't want to, like I said, I don't want to rush into the things. German index, I mean, look at this one. This one's on fire. I mean, look, I threw out an idea here recently. DAX traders are not bothered about steel and aluminum tariffs, and that was on Monday. We were still below this barrier, and look at this, boom, we hit the 22,000, we cleared it. Fantastic. So don't get me wrong, that's I'm talking about the cash index. On the futures, we have already cleared it, and that's absolutely fine. But here on the cash, I mean, we cleared it, amazing. And by the way, ignore this DE 30. I mean, should be 40, but we have the correct one here, 40. But okay, there is like a little miss here. But anyway, look, for now, I can say this way: it's very difficult to find some sort of how to say it? I'm not even, let's say, find a reason to go short here. Okay, one reason is because maybe somebody might say, but oh, we're overbought. Yes, in a way, but you know, it's really subjective. So maybe it's not overbought. Maybe it's still, you know, on a good path higher, and it could still drift further north. So just what can I say? At the moment, don't go against the train. Don't stand in front of the train, and just wait for the train to start reversing, or showing at least signals and signs that is ready to reverse. Right now, this is, look, we need a close of the day. We need to see what's going to happen. And like I said, I think that inflation numbers, U.S. inflation numbers could, you know, have their effect on the U.S. stock market, and this could have a knock-on effect on other indices as well. So keeping a close eye on this one. Let's see. Very quickly on the FTSE 100, so similar story. You look at this, we're on fire in here, and we continue to rally. I mean, look at this. I mean, we're already gaining what, almost 8%. By the way, on DAX, what do we have here? What are we gaining on DAX? Let me just grab this one, January. So from here to here, I mean, look at this, 11% already. I mean, this is wow. Well, you know, the higher you rise, the harder you fall, right? I mean, but okay, I'm not trying to be that pessimist or anything, but again, you know, at some point this will have to reverse. Let's jump into the crypto world very quickly, ladies and gentlemen, before I jump into further action into Forex and commodities. Look, WTI oil, Jindao, WTI, yes, of course, I will have a look at that one. Like I said, first I'll go through the cryptos, and then I'll jump into Forex very quickly, and then commodities, if you don't mind. Yes, I will look into that, certainly. Bitcoin, look, for now, I cannot say anything here. I mean, we're overall in a range here in this little, overall from around the end of November, beginning of December. We're in this little range, but from even a shorter time frame, shorter time period, we're actually oscillating around the 50-day EMA. So we're basically stuck. Now, I do like the psychological 100 level still, 100,000. I do like that, and I need to see some sort of a clearance of that area in order to go higher, because again, maybe at the same time, from the shorter term perspective, we could break this downside line, and you know, this way we could open the door to some higher levels. But again, at the moment, we're stuck. It seems like we're waiting for some sort of catalyst. It seems like, to me, it seems like this, that everybody was so hoping to see, you know, the Trump speech, and everybody was hoping to see that he's gonna mention something about Bitcoin and something about, in his inauguration speech about something crypto related, so that, you know, everybody was on this already ready to press the buy button, and it didn't happen, and instead, like, it reversed back down. I think that the whole moment was the buy the rumor, sell the news thing here, and yeah, that's what we're getting right now. We're getting a little bit of a corrective move lower. However, am I saying that this is, we're done with the bullish scenario? No, not really. We need, like I said, we're neither done with the bullish nor the bearish. And excuse me. And but for the bearish, I need to see a drop below the 100-day EMA. Simple as that. Yes, we have the area somewhere here, this 90,000 zone. I like that area, the 90,000 zone. I think this is the good area for a breakout. If we can drop below that, then great. More sellers here could join in. Ethereum, very quickly on this one, we're stuck again. It's nothing major to say here. Ripple is also oscillating around the 50-day EMA. We're just waiting to see what's going to happen next. In general, let's put it this. I'll say it this way. As long as we stay below the 50-day EMA, I am leaning a little bit more towards the 100-day EMA move, which is on the lower side here. Litecoin, let's have a look at this one. Oh, beautiful. Look at this. After we've tested this key area of resistance, which is the downside line, we kind of slightly overshot it, but it's okay. We tested this area and look at this. Boom, beautiful reversal back down, shooting star here. Is this going to lead to some lower levels? Well, let's wait and see. Let's not rush into things. For me to get let's say very excited with the downside, well, I'll be very, very conservative, and I need to see a clearance of somewhere of this area. I mean, I don't have a clear level, as you can see here yourselves, but basically somewhere below this area, or let's put it this way, the 100-day EMA, which is shown here as the blue line. Hopefully you can see it, and if we can clear that blue line, amazing. I will go lower. Dogecoin, very quick update on this one, still in a falling channel pattern, but above the 200-day EMA. So again, we're not really, creating any value here, in my opinion. I don't see any much value here, and that's why what I'm going to do here, I'm just going to wait for a drop below the 200-day EMA again, then I'll consider maybe a move further south. Let's jump into the Forex world very quickly. Actually, you know what? In Forex world, let's keep that one for later. I'll jump into gold, and then Jindao, if you're still watching, I'm going to jump into oil. So gold, look at this beautiful movement we had yesterday. Look, we created a new all-time high. Congratulations to everybody who's holding this 2,942. I think the market is now like trying to chill a little bit, trying to understand what's going to happen next, and we have the inflation numbers coming out. What kind of reaction will we get in the dollar, and at the moment, for now, I'm seeing a little bit of a correction lower. If I do look at this only from the perspective of these three candles, what I see a possible bullish flag. Is that going to be the case? Too early to say, but again, we're seeing something here. Let's see if it's going to confirm. Either way, well, I would prefer actually to wait for a push somewhere above this 2,907, 8 zone, something like that, before, let's say, getting very comfortable with some higher levels. If I can get that move, okay, I'm going to get a little bit more bullish with this scenario. I'm going to start aiming for the current all-time high, maybe even that psychological 3,000 zone, so which me and Jindao keep on talking about. So we talked about it last year, where we're going to be one of those, who's going to be waiting for like Bitcoin, those predictors, like Bitcoin enthusiasts who were like 10 years ago, Bitcoin is going to reach soon. It's going to reach the 100,000 soon. It's going to be there, and then 10 years later, yeah, you see, I told you so. Well, Dow Jones probably will reach 100,000 at some point as well. I mean, I'm sure in that. 100,000 in Dow Jones. Believe me. Am I wrong? No, I'm not wrong. I mean, this is part of the market. So anyway, look. For now, what I'm seeing here is like 3,000. Okay, everybody's talking about 3,000, but I think that we're getting a little bit of a chill moment here. We're retracing back down, but not too much. So this is what I'm seeing here. I'm seeing some sort of like little correction, and like I said, maybe this could confirm a nice possible bullish flag. Again, I'm not saying that this is going to be exactly that, but it's just, well, at least looks like this. So from the very short-term perspective, I would say this way: if we get a nice little drop below this 2,882 zone, I will consider a move lower. That's kind of it. So long story short, oh, excuse me, my voice is going down. Let me just have a sip of tea a little bit. I think the aircon is drying my throat a little bit. Anyway, that's going to be my game plan. Am I saying that if we do drop below the 2,882 zone, we're going to become very bearish? No, this just kind of opens the door to a bit of a larger correction to the downside. But even then, we have a little obstacle near the 2,855. Simple as that. So be careful, keep your eyes on this, and hey, do not rush into things, because again, this could get very volatile if we do get closer to the, or not if, but when we do get closer to the US CPIs today, and then a little bit after that. Very quickly on silver, similar story, but oh look, I'm loving this area. I mean, this is just amazing, fascinating, and whatever, and all the other adjectives that we can use here. Where's that box that I'm trying to pick up on? Ah, there we go. So basically this little hurdle here, this is actually quite nice, and this is quite a strong area of resistance. We need a clearance of that, yes, in order to go higher. If we can get that, I'm getting a little bit more comfortable with the upside. Let's jump into very quickly just platinum. Similar story, good activity here. Copper, yes, strong activity here. Of course, I'm keeping an eye on this little territory right there, 4.66 zone-ish, and if we can, stay somehow above it, then yes, we can go from there. Anyway, oil. Look, we're pushing back up. So we're pushing back up, back above the opening price of this year, of last year. But by the way, this is from last year. This is from this year, and they're almost coinciding. So I'm not really I don't really have a strong opinion on oil yet, because for me overall it's still on a downtrend. It's still it has been on a downtrend since like March 2022, and it still is, and it's still, I mean, well, downtrend. I would say creating lower highs but struggling with a lower low. So that's what the situation is happening. Whenever we get something like that, we get ourselves a descending triangle pattern. So according to all the TA rules, such patterns tend to break to the downside. However, I've seen this happening in the opposite direction, so I'm not really rushing too much into any conclusion yet, because yes, from around beginning, or let's say from mid-December, we saw a rally back up. Then since let's say mid-January, we're seeing a little bit of a correction back down here. It seems like we are maybe creating a higher low here. However, on from the broader perspective, I mean, for me, if I need to get bullish on this one somehow, I need to really see a push above that psychological $80 mark. I know we're missing out on a lot of territory, but hey, if I don't feel it, if I don't like it, I'm not really touching it. So basically, for me, this is way too close still. We're currently, like I said, it seems like we're currently starting to oscillate around the opening price, this year's opening and last year's opening price. If we continue to do so, okay, like, I mean, for those who are like, range traders, maybe this is something exciting, but for me personally, I'm not really loving it. So I'm just going to leave it here. So at this point, I need some sort of like a better move either to the upside or to the downside in order to start, getting very excited with this. So for the downside, by the way, I'm going to get a little bit more excited if we get a drop below the 70.40 zone, or in general below the $70 mark. And if we can get that clearance, amazing, I'll go lower. So we're not far. Yes, we pushed back above the opening price, so now we're back into positive territory for the year. But am I really, like I said, am I really getting very comfortable with the downside here? No. Am I getting very comfortable with the upside here? No. So I'm just stuck here and observing the price action. Like I said, for me, I need some more clarity. On one hand, we have issues with Iran and Russia in terms of sanctions on them. But on the other hand, you have like a drill baby drill moment. But then again, there is a tension in the Middle East that that the ceasefire could end. So yeah, I mean, there's a lot of ifs for now. So that's why whenever we're in such a limbo, I would just kind of tend to just to take the wait and see approach. Natural gas, now this was a different picture here. Boom, a nice little beautiful move here. Broke the downside line, which I kept on talking about from the beginning of this week and last week as well. I said I need a clearance of this downside line in order to go higher. I need a clearance of that 50-day EMA as well in order to go higher. Well, I'm getting all that. So am I getting very bullish here? I am leaning towards the upside still. In nowadays, in general, in the market, you should never be very bullish or very bearish. I mean, look, anything can happen. Like, I mean, when it's way too obvious, then it's way too obvious. When it's way too good to be true, then it's way too good to be true. Jindao, no problem. Look, you're welcome. I mean, you're, yeah. Hopefully that somehow helps. Anyway, natural gas. So in general, we're taking most of the boxes here for the upside. We're above all the EMAs, we're above this downside line. So in a way, look, I'll say it this way: as long as we stay somewhere above this 3.40 zone, I'm going to continue targeting the upside, where my next target will be this 3.71 zone-ish, or maybe even higher than that levels. Ooh, coffee. So I did a little video here on TradingView. You can check it out. You can check out our platform here, and basically you can check out our videos. So I did a little video on the coffee futures, and basically what I said, that look, we had a spectacular rally so far, and this is just amazing. And of course I understand for those who are holding the coffee futures, then yes, for you it's congratulations. However, for the market in general, it's a little bit of a problem because, again, look, we have an increase of coffee lovers, right? I mean, around the world, and we only have that much of supply. And whenever we have nature, fury, then that kind of gets, straight away affected. So, long story short, for now, I would like to say that I am not really very bullish or not very bearish. I'm just observing the price action because I like the fact that we corrected back down towards that 23.6 here on the Fibonacci retracement, which is drawn from the lowest point of this year to the highest point, the current highest point of this year. So for now, we are, like I said, in this little mode here. And if we can drop below that 23.6, I will consider a larger correction to the downside, because I'm not getting bearish here, no, because the issues are not solved yet. So unless we see a slowdown in demand, or maybe like the supply getting stabilized, then maybe I'll consider retracement back down. But at this point, any move lower could be classed as a temporary correction before another possible leg of buying. Sugar, by the way, I wanted to quickly pick up on sugar, ladies and gentlemen. This is one of my favorite ones, and look at this. I mean, this is looking very nice from the technical perspective. I mean, we are seeing a possible inverted head and shoulders pattern here on sugar. So previously I talked a while ago, I talked about this one, and I said, look, maybe we're forming something of a bullish forming something like of a bullish flag here, and now we're seeing, what we're seeing here is basically, yeah, there is a chance for this one to pop higher. So look, I'm not gonna say that this is for sure is gonna happen but certainly we are approaching key resistance. Let's see if it's gonna provide a hold up. If it struggles and we clear this 20 zone, the psychological 20 zone, I am leaning towards the upside then. How far? God knows, but for sure I will start considering a possible move back to these areas right here, like the 23.6, or even maybe lower, maybe a little bit lower than that initially, but then, or maybe even higher. We'll see. But again, a clearance is needed first. Let's jump into the Forex world very quickly, ladies and gentlemen. AUDUSD looking good. So we're near that 50-day EMA still. I talked a lot about this already last week, this week, and I'm going to continue talking about this, and I'm going to continue saying that, hey, the 50-day EMA is something that I'm watching here very quickly, very carefully, not very quickly, very carefully. But again, the clearance of that 0.6330 zone is required. So all eyes are on this US CPIs today. If we somehow see weakness in the US dollar, guess what? AUDUSD could pop nicely to the upside. Otherwise, we're stuck still in this range. NZD USD similar story. 50-day EMA, that's what I'm watching. Let me just jump into GBPUSD on this one as well. Let me just here pick up on this one. So yes, look, I mean, beautiful rebound from this upside line. I talked about this last week and this week as well. I said, look, we could potentially be forming something of an ascending triangle pattern. According to all the tier rules, such patterns tend to break to the upside. However, can we, for sure, can we get something like that? No, because we always go from what we have and from the reaction that we get, and in terms of the reaction to the economic news. So for now, I'm just observing this 50-day EMA. I like that. The same story as with other AUD and NZD pairs. But this 1.2523 zone ish, I like that one. I prefer to see wait for a break above that one in order to go higher. Very quickly on EURUSD here. EURUSD is pushing back up. Look, I mean, again, a similar story. If we get some sort of weakness in the US dollar, then certainly we could see this one popping higher. However, do I believe that the euro is very strong right now? No, not really, because again, this is it's a bit of a we still have the ECB, which is planning to go and cut rates. So what kind of strength of the euro are we talking right now? So I think that there could be some more weakness to come on the euro side. But again, let's wait and see. Let's see how the US dollar reacts. But if we somehow start popping above the 1.0533 territory, great. I'll go to the upside, because at the same time we could pop above the 100-day EMA here, shown as the blue line. But am I excluding the idea of dropping, or going towards towards parity, towards 1-to-1 level? No, I'm not, because again, we need a stronger dollar, and if the Fed right now is not in the mood to cut, maybe this could strengthen the US dollar, and this could result in a negative. It could end up in a negative way for EURUSD. Again, either way, some confirmation breaks are needed. So for the downside, you need to see a drop below that 1.02 territory, somewhere there, in order to go lower. Very quickly on EUROJPY here, I love this pair, and look at this. I mean, it is very, very interesting. Are we forming something of a head and shoulders pattern here? Well, it kind of seems like that. So it kind of seems like that. So basically, I mean, but again, to find a good area here, I mean, maybe this, just maybe here, but again, I think this upside line here, look, it's a little bit it's a little bit subjective here. So that's why I'm not going to get rid of, I'm not going to have this, I'm examining the whole area. So in a way, I would say this way, to be very conservative, and if we're looking for some lower levels, a drop below this hurdle here, the 154.38 is needed. This way, if we're claiming lower low could be confirmed, then yes, congratulations to the bears. We could see some lower levels right there. But at this point, we're seeing it bounce back up. Am I saying that I'm getting very bullish on this one? No. But am I getting very bearish? No. But for the bullishness, I need to see a clearance of this downside line together with all the EMAs here on my daily chart. And let's jump into finally USDJPY here very quickly. Beautiful rebound back up. We're testing this downside line. Great, wonderful. This one's taken from the high of the 3rd of July of 2024. Am I getting very bullish? Look, I think, first of all, these lines have to be updated, because now I think that they don't make much sense. This line needs to go. Let's get rid of it. But this one, let me recycle it. Let me just recycle this very quickly. By the way, always recycle, ladies and gentlemen. There's a hidden ecological message for you there. Yep, there we go. This downside line here, look, I need to see a break of that one. If I can get a break of that downside line, at the same time I could get a break of this of all the, I could be placed above all the EMAs on my daily chart, and this could open the door to some higher levels. Very simple. So yeah, also, like I said, keeping our eyes on the US CPIs, as I already talked about those. So if you missed my commentary on the US CPI, so you can wait until this video is finished. I mean, you can go scroll back into the beginning of the video, or you can actually keep your eyes, I mean, you can have a look at the top news section on our YouTube channel. In the videos, you'll see the top news, and I did a separate piece on US CPIs yesterday, so you can have a look at that one as well. Look, long story short, that's, like I said, that's the game plan. For now, what we're seeing here is a temporary correction for a possible leg of selling again, because we're still below this downside line. And if we continue to trade below that downside line, okay, great, I'm gonna consider another decline. US dollar against the Canadian dollar, very carefully monitoring this one today. I mean, this is like DXY almost, and it's near this key area of resistance. So basically, we're still wobbling above. We're wobbling above the 50-day EMA. We're still above the 1.4260 zone here. I need a clearance of that in order to go lower. For the upside, for the yes, a push above the 1.4484 is needed in order to consider a move higher. USDCHF, very quickly, we're stuck here in between the levels here, between the downside and the upside line. So hey, I'm loving this because at some point this will have to explode to the upside or break out to the downside. But at this point, I'm loving the, like I said, the action here right now. It's not much, but it's okay. It's not much, but it's okay. Bum bum bum. So yes, anyway, like in the song. For now, keep your eyes on this one. Keep your eyes on the US CPIs today, and like I said, this might play out nicely. So, ladies and gentlemen, on that note, I would like to wrap it up here. Thank you very much for everybody who is watching. Jindao, thank you very much for your comments and for your support. I really appreciate that, and it really helps a lot. So in general, ladies and gentlemen, whoever, if you have questions, you can always drop them in the live section in the chat box, or you can keep them actually, or drop them in the box below after this video gets uploaded. So hey, I hope you enjoyed the session. Hopefully, like I said, you'll stay careful and safe today with the US CPI. So do not rush into things. Just keep an eye on everything. And hey, really appreciate your time, ladies and gentlemen. So join me on Friday, as always, 10 o'clock GMT plus 2 time, or 8 o'clock GMT time. So yes, join me, and hopefully you'll enjoy that session as well. So thank you very much, and I'll see you later. Bye-bye.